Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's update our view on the gold market. So as we've already said today in update on euro currency, fundamentals currently come on the first stage. In particular speaking, all this soap opera around the debt sale. So mostly we see the impact of the technical moment, technical factors that trigger demand for United States dollar. So investors are worried that the United States could take the default. Maybe it will be technical, maybe it will be just for a week or maybe 2 weeks. Probably within some time the problem will be resolved, but even this temporal short-term default that could be taken, this could really shake the overall global financial system and the system of the collaterals in a way of United States bonds. Why? It's just because, as you know, a lot of different hedge funds, mutual funds, pension funds, and so on, use the bonds, United States Treasury bonds, as riskless assets for collateral purposes. So it means that they just put them as the collateral and get the loans, get the money to make some leverage on investments or something of that sort. Maybe for some other reasons. Just imagine that the yield of the United States bonds jumps and they're dropping in value, even for the 20-25% maybe. What will happen with the collaterals across the globe and a huge amount of money? It means that all these positions will be undervalued, and funds and all financial authorities who use United States Treasury bonds as a collateral will have to add margin, will have to provide cash to get margin to initial level. This makes a real huge demand in one single moment for United States dollar. And it seems that some traders, some funds already starts preparation for that. As you can see that assets are going down, all assets, all currencies. We could see even on the stock market starts dropping. It means some preparation for this moment is going. And another confirmation of this suggestion is that, well, if you take a look at the recent statistics that we've got, retail sales, you'll see that they were really poor. So it was huge downside reversal of the March numbers. It was 2 times lower retail sales in April, and we see no positive reaction in the markets. Although these data suggest more diverse steps from the Fed, and it suggests sooner starting of the rate easing, something of that sort. It usually should support other assets such as currencies, I mean euro currency for example, and gold market as well. But we do not see anything of this kind. So it means that debt sale problem right now takes all minds on the investors. They're ignoring even important statistics that have been released. We should keep in mind this. It means that under this factor, gold probably will remain under pressure for some time more, and we're not exclude that maybe we will see another downside continuation in nearest time. So based on the technical picture, you can see market already stands under the confluence area. Oversold for today stands 1975. So that's potentially the level that market could reach theoretically if it will keep going lower. Meantime, on 4 time frame charts, take a look. Market has completed the targets that we have specified very accurately. Recall what our trading plan yesterday. We said if we will get here the grabber, you could wait for some strong upward action, somewhere to 20-25 at least. If no grabber will be formed, you could try to take the short position immediately, because in this case it might happen that market could drop right from there. So currently, based on this butterfly pattern, we also could suggest that it has good chances to proceed lower to the next destination point. It will be 1618 extension of the same butterfly, 1970. which is very close to the daily average of 1975, 1970. It's very close. So that's just logic of the butterfly trading. So when you have the acceleration to the 127, it means that after minor reaction on this target, it's really good chances that market will proceed to the 1618. It's common logic. In the current picture, based at least on this chart, we could say that probably 2000 events might be some kind of the target of the pullbacks, just because here we have few previous lows. And so market could form some retracement here to show reaction on this target, and then this downside continuation could happen. From that standpoint, on the hourly chart, we could consider these two levels. This actually 2000 even, this is 2006, 2008. So somewhere between this area is probably most probable destination of the pullback that will happen. Here's guys, by the way, as you can see, this butterfly that we discussed yesterday as well, so also has been completed. So 1618 extension of this minor butterfly is done. So that's been said on the gold market by far. Until we will not see the light in the tunnel of the depth sale discussion, we can't consider by far taking the long position on the gold, because it could become the hostage of the purely technical moments that I have just described and explained to you in the beginning of the video. And for the next step, for bearish positions taken for another action, probably to the 1970, 1975, we could wait for some pullback and consider this area where we could make the decision on a possible short entry.